Hello, welcome everyone. We'll start our lesson today. So it is the first lesson on financial management, OTHM level 7 extended diploma in management. So if you have any question, those are just listening these recording. So please drop me email. My email addresses are there, my personal and office, which normally I use office one, but sometime, if you can't really hold me, I can, the regular check my personal as well. Sometime I miss, the others. So please just follow these two emails if you need me, if you have any question. So we'll start our lesson today. A couple of you maybe don't know me. My name is Anjum Sattar. I'm working with the Versity around 3.5 years, and I found it's such a nice place to work, and it's a very friendly environment, and we all work as a team. So please, if you not get me, if you have any question, feel free, drop me email, drop me message, and I'll get back to you as soon as possible. So this lesson is quite crucial because it's quite applicable in our daily lives as well. So will quick, first we'll discuss with you aims and objective of the lesson. So let's, introduction to modules and assessment, which I'll go through. Introduction to management accounting, cost accounting, and financial accounting. What is the difference between them? And it's quite crucial to understand because as a financial management, and some people say, oh, I'm a financial analyst, I'm a financial management, I'm working in a cost management, I'm a cost controller, so I'm a financial accountant, I'm a management accountant. So it's quite good to be understand the difference between management accountant and financial accountant or the cost accountant. So we'll go through. Discussion will be on the costing system in our organization. Costing system is very important. You measure your cost. Cost is quite crucial to measure because if you don't monitor your costing, your cost will increase. Ultimately, this will lead to risk of sustainability of the organization, which is a big question mark. Like we are discussing about the Brexit, what is happening in the UK, and what will be happen towards the costing, and what costing methods are best to use and cost is different behavior of the cost. You maybe already learn in different during different courses, maybe in the past, or you already observe. The cost behavior can be fixed cost, the cost which stay the same. Doesn't matter the Brexit will happen or not, the cost will stay the fixed. The cost will change due to the change in the costing itself. The prices will become expensive due to the inflation. Like we heard about in UK, approximately inflation rate is going around 2.5 to 3%. So that's a variable cost. The prices will increase. Ultimately, our cost will increase. So it's behaving like a variable cost. So which will go through variances. Why we have a variance? So you budget something, we budget our expenditure, our personal finances as well in business. Why you spending more than the budgeted? Why we are spending under the budgeting? What are the causes behind the variance? Why this is a variance? Variance is the difference between and actual costing. So that's all we'll go through. So before starting, I'll quick, go through with you the modules contents, this unit contents which we're supposed to learn. Under unit 5, strategic financial management, which we need to go through. So only assessment criteria which will be pass or fail based on assignment, which I'll show you assignment brief as well. So first learning outcome which supposed to be an assessment criteria under one learning outcome 1.1, 1.2, 1.3. So be able to apply the tools and technique of cost accounting. So we'll discuss few techniques today, but we'll go through further, our following lessons. Typically analyze the concept and the feature and the importance of costing accounting in an organization. So we'll discuss about what is the role of cost accounting in our organization. Apply the tool of cost designing costing system and organization, which we'll go through. We'll discuss, recommend improvement of costing and the pricing system and organization, how we can improve the costing and pricing system which we are decide the price based on the cost. So all our discussion will be focused today. So second, our learning outcome, be able to critically analyze the financial performance. So we'll go through during our second lesson financial position of the companies based on the financial statement. We'll use different company financial statement. We'll calculate financial ratios and will recommend managers and some recommendation based on analysis, either to invest or not invest, either to buy or not, either to manufacture or not, either to increase profit or not, either the cost will increase or not. So all this discussion will be on the base of our performance analysis, ratio analysis during our future lessons. So third, our learning outcome, be able to evaluate the budgetary process of organization. We'll discuss about budget, what is the difference between budget. We'll try to prepare different budget like a cash budget, which will go through cash forecast, and we'll always budget linked with the sale forecast. Then the fourth lesson will go through be able to recommend effective long-term and the short-term sources of funding. So we'll discuss different sources of funding, where we can get the fund, why the part, and what sort of the factor are the factors we need to look around in the short term, medium term, and the long term. What effect will be on our organization performance. So all this will be in our focus in the lesson 4. And the last but not least lesson, which we'll go through, be able to critical appraise. So like we all couple of us is working in different organization. We do appraisal end of the year, checking the performance, our individual as well as the organization. So in this under this learning outcome, we'll discuss about how we can appraise different project, why we'll invest different project on different basis of our investment appraisal, which we'll use during our lesson. So we'll learn about the investment appraisal methods and like NPV, net present value, IAR, and all these. These are the inductive contents which we supposed to be learn under. So first, we today lesson will be more focused on the costing. So that's all will be our discussion. So please, if you did not get me, if you have any question, ask me. I'm just recording this lesson, so no one, please try to join this lesson on every Saturday 11:30. Your lessons will be good few weeks, so please carry on attending. If you have in the meanwhile any question, so these are the recommended books, which you can get from library. You can buy if you want to, you can find, or get from, and these are additional recommended the books, which we supposed to use. So that's all. So let's, we'll go through. I'll quick, show you assignment which we supposed to, and we can contextualize our discussion according to the assignment as well. So I discussed with you, there are the 5 assessment, 5 learning outcome. So which we need to go through task 1 to 3, which will go through assessment criteria 2.1, 2.2, 2.3, 5.1, 5.2, 5.3. That's whatever you will learn under the learning outcome. So task 2, you will go through 4.1, 4.2 assessment criteria, which cover, and task 3. So today whatever we are discussing, that will be more relevant to task 3, which is because of course our assignment is set slightly different in the order, which is set by the OTHM, your awarding body. So that's why we just following the learning outcome first, and then we'll go through the last lesson, how we can address all these tasks within our lessons, please. So today lesson will be more focused on the task 3, 1.1, 1.2, 1.3, and then of course some address will be 3.1, 3.2 when we'll do the learning outcome 3. Anybody any question, drop me email, call, just let Roman knows as well in management, so we can get back to you as soon as possible. So let's we'll start our lessons today. So what do you know about cost accounting? Anybody knows anything about cost accounting? Just think about costs. What make costs? So cost, the things we manufacture, the things we are buying, we are selling, how much is costing us. So when we reduce the cost, it's increase our. So cost is reducing. When the cost is reducing, the profit will increase. So that's why it's quite crucial to reduce the cost. So today lesson will discuss about what's happened with these companies. Those people in the UK very well know, or maybe overseas as well know as well what happened with these companies. These companies collapsed, not anymore in business operation, because the reason is these companies collapsed due to the high cost and no cash. And ultimately, if we don't monitor, our cost is increasing, our expenses are increasing, we are borrowing more money, and we can't sustain in a business in a simple word. So let's, we'll go through what is about management accounting and financial accounting. So first of all, whatever we are doing, either we preparing account under management accounting, cost accounting, or financial accounting, data is very important. Data is mean information or the costing information. So data used prepare the management accounts. So accounting is a part of management accounting. We call it the management accounting. So financial accounting are the same. We need financial information which is used most of outside users. So the difference between accounts arise because the data is analyzed in different ways. So management accounting is internally used within a business. Like, the way to calculate the costing, how much will be manufacturing cost, how much raw material you purchase, how much labor you, how much other expenses you have, we call them overhead, those not directly involved into the production. So that's come under the management accounting. And the financial accounting used for external reporting, legal requirement for like profit and loss statement, like income statement, also known as the profit and loss statement, balance sheet, also known as a statement of financial position, cash flow statement, known as a statement of cash flow, statement of change in owner equity or the shareholder statement. These all come under the financial accounting. Any company's financial statement you can find in the UK under the company's house. Normally the companies need to submit their financial statement, and we can find on their website as well. Those are the public limited company information, normally on the public domain. But management accounting is internal, is very hard to find, but management account and internally used. Major purpose of management accounting are the cost accounting to prepare are the cost accounts. Planning, you plan something, you control how much is. If you don't control the cost, what will be happen? Decision making. You buy in manufacturing within a country, within a company, or you buy from outside. Buying from China may is cheaper, but if we'll everything we buy from China may will carry on losing the jobs, local people. So always you may be heard about the social accounting. We need to look around the best interest of the public. So cost not just the in a monetary cost, is a non-monetary cost as a society, which will bear as well, which we have to. So we need to look around the non requirement. If you management accounting, you don't keep your internal record, it's not you're not going to violate the law. You're saying that's fine, it's costing me, I'm not really keeping the record as well. But record keeping is quite crucial to be review for planning, controlling, and decision making. So three words under cost accounting: you calculate the cost for planning purposes, for controlling and decision making purposes. So that's why include both financial and non-financial information under the costing. So next are area. So whenever you manufacturing anything, we're preparing something, we design something, we have a cost. So main cost elements. So what are the key costs? You're going to manufacture something, you're going to produce something within an organization. You have any project, you're going to launch, you're going to build a river, you're going to launch any other project which you're supposed to. So we always need to be how much is the material will be required, material, stock, inventories, all this, how much will require to produce something. So we need a material cost to calculate. We need to calculate the labor cost, how much labor will be required. So when national minimum wage increase, anybody knows how much is the national minimum wage, which is the by law national minimum. So national minimum wage. Anybody knows what is meant by national minimum wage? Is it £7.80 now? National living wage. So when the national minimum wage increase, our labor costs will increase as well. So always we need to reflect in our costing. So if you're not going to charge the right price from the customer, you're going to be bear the losses. So always we need to reflect in the product. Okay, if you be hiring people from agency, maybe it's costing you more than hire them directly. So always we need to look around per labor hours cost towards our per unit cost towards labor. So expenses, any other expenses, those not direct, indirect expenses like overhead, like we have admin department not directly involved into production, but they are doing admin activity. They handle the call, they buy this stationery, they keep the record of all. So HR, they recruit the people for us, in a production department as well. So we need to look around what is, overhead cost. A lot of companies like a British Gas or various other organizations, they move their call center abroad, their IT department abroad, their pay department abroad to reduce these overhead expenses, because it's very competitive world we are living in, and we need to look around, how we can reduce the cost. So direct costs, direct labor and direct material is known as a direct cost, which is also known as a prime cost. So prime cost is mean the direct cost, the cost which we can trace within a product, how much is directly cost you. So let's we look next unit cost card. So unit cost card is look around how much is cost to make or manufactured one unit. So direct labor, how much will be direct material, how much will be the other direct expenses related to production. When we add all the direct expenses, this is called prime cost. Then we have a production overhead, like we have a store room, we have a maintenance room, maintenance service department, or the service department which provides services, like they do the service or vehicle for the maintenance. They maintain the, we have a engineering work, that's it, production overhead cost we call charge, because every department we have a budget, so we can give money from that budget. So production cost. Then we have a non-production overhead. So non-production overhead that are not directly related to the production, but still these are the costs. Selling and distribution is a cost. Administration is a cost. Finance is a cost. So when we add them all, it's become a cost. So we can divide how many units we are producing, how much is cost all. So we can find one unit cost, and then we can decide what price will be appropriate to charge from customer. Of course, we look our competitors. So next we are looking different methods of costing. So different organizations use different costing methods. The valuation of different costing elements, material, labor, and expense, which make up the unit cost of a product or the production, may be arrived at the number of different ways. So batch costing, you're making batch 10,000 unit in the one batch. So that's we use 10,000 unit cost into one batch. It means one batch costs how much, one pallet costs how much. So that's it. Absorption costing is mean observe. Like I give you example. Normally I quote, you're living in a shared accommodation, and the room you occupied it, or your room the you living in you is a very small room, but other your room house space they have a big room. Is it okay to pay the equal energy bills, gas, electricity? No, it's not it's not in commercial work is acceptable. So what we can do, we can observe that cost to our rent plus. So we can say, okay, you are occupied such a area, total area of the house, total cost towards energy bills we are paying divided by the total square foot area of the house and times by how much area you are occupied. So we can observe the cost to decide, how much we supposed to charge. So job costing, job costing is all about when, like a construction job you want to extend. So like a builders, they have a different jobs, in different, they do the costing of each job separately. So that's known as a job costing. So marginal cost, marginal the V as a margin. So every successive unit cost we call the marginal cost. So every successive unit cost is known as a marginal cost. So marginal cost is mean the cost of every additional units you produce is called marginal cost. Process costing. In real world, in production, in manufacturing organization, we have different processes. Like, the process one, they make maybe just a bottle. Process two, they just, make the labels for the bottles, and three, filling the water into bottles. These are water manufacturing. So these are three, four processes. So that's we call process costing. So process costing, each process level you can measure the costing, and because it's a link, each process can be have a own budget as well. So next, we're looking the cost by function. Each organization have a different department and different cost. We call it a cost by function. All this is known as a functional area in the organization. Like a production cost include material were used to make the product and associated cost of the supervision maintaining machinery. So administrative costs are the costs arising for for managing and coordinating the business. Selling and distribution are the costs associated with the selling and distribution, including advertising, delivery. Financing cost is the cost, when you borrow money from banks, you're paying interest on it, is called financing cost. These are different costs. So finance department cost is a financing cost. Administration department cost is administrative cost. So production department or production factory is called production cost, and marketing and selling distribution department is called selling and distribution cost. So we can calculate the each cost by functions. We can look around, then we can decide we have overhead cost is quite high, so maybe we can do some outsource, or we can reduce the people accordingly. Okay, anybody any question? If not, so if you have a question, drop me email, because you're listening this lesson, so please join directly, and then we can argue and we can discuss and we can do some our productive discussion. Today we're not doing numerical, but onward we'll carry on doing some numericals as well. So direct and indirect cost element. Direct cost is the cost that can directly identify the product. The cost which is traceable within a product is called direct cost. Indirect cost is the cost incurred while the making a product and cannot be directly identified within a product. Direct material, direct labor, direct expenses, as earlier mentioned, is called prime cost. Direct cost, indirect material, indirect labor, indirect expenses, administrative overhead, selling. These are all come direct cost. So when we add direct, indirect, both is called product cost. How much is costing me as a product? So direct cost, indirect cost, and allocation. Indirect cost, we can allocate it according to area, according to the value, the machine, according to the usage. So different bases of allocation. So cost behavior. So next our discussion will be cost behavior. So costs are influenced by many factors. The most important factor is derived level of activity or the volume of output. So basic principle of the cost: if you buy more slanties, more chocolate, so it costs you more. Yes. So because it's a variable cost, the cost will change. So if you go more time out in the shopping during and shopping store, so it costs you more because the buying more, its level of activity, and you buy more, the cost will increase. So that's the level of activity, maybe number of unit produced, number of items sold, number of items sold, number of invoices issued, number of units of electricity consumed. So all this cost is known as a variable cost. Okay, variable cost, also known marginal cost, which are all variable. Variable directly with the level of, okay. Variable cost per unit is same for the each unit produced. The total variable cost increase as the level of activities increase. Fixed cost, the cost stay fixed. Like, if I'll give you example like a rent, like a council tax is a fixed cost every month. It's not going to change. You're living one person in a house, you're living five people in a house, so maybe 5 bedroom house, you're paying rent every month. So that's a fixed cost. Either you're living one person in a house or you're living few people in a house. So that's called semi-variable. Semi-variable cost is a cost where both fixed and variable together. Like you have a mobile phone, the line rental of mobile phone is your fixed cost, or the home phone line rental is a fixed cost. The call charges are variable. If you make more calls, you have to pay more bill. If you make less calls, you pay less bill. Pay as you go meter on energy, gas, electricity. So if you're using more electricity, it's mean your more variable cost, but the standing charge at the meter charge is called the fixed cost. So step cost. Step is like a ladder. You're moving one step to other step. So if we normally call it capacity. So capacity, if we work up to the capacity, our fixed cost stay the fixed. If we need to increase the capacity, our fixed cost will also increase. We're supposed to produce 10,000 units per annum. If we produce and we have a capacity to produce 10,000 units per annum, so our fixed cost for 10,000 will stay the fixed. So 10,000 unit required produce exceed 10,000, so the rent cost will go up a step. So of the 10,000 units, maybe the fixed cost, because the production factory rent is a fixed there, 10,000. We are paying, for suppose we are paying 12,000 a year per year, £1,000 a month, but we can only produce 10,000 units. So that's the fixed cost for factory. But now we have a order about 15,000 unit, but the factory have only capacity 10,000. So now we need to move to the next level. Order is 15,000. We need a required one more factory which have a capacity. We in the step we saying same capacity for the next level. So 10,000 for unit of capacity. So now we have a capacity of 20,000 units. So but our cost will move from 10,000 unit cost, which I mentioned, 12,000 at the factory rent. So we need a one more factory, that will be 24,000. So we are moving from one step to other step. So that's it called step cost. Anybody any question? If you not get me, so please ask me. We'll go through some examples as well. So fixed cost, if the curve like shows is a fix, is stay fixed. Step is moving one step as your activities increase, you're moving upward steps. So that's your called step cost. Variable cost, the cost which carry on changing. Yes, graph of semi-variable, there can be a fixed and variable cost together, is called semi-variable cost. So to determine when we use semi-variable cost in a product, we've been given the total cost and we need to know how much is a fixed, how much is a variable. So we use one method is called high-low method. So high number of units we are going to produce and low number of units we are going to produce. So we take the difference of high and low number of units. Then the same we do the different high number of units total cost and low number of units total cost. Then we divide them on them so we can find what is a variable. Let's, we'll see this example. Highest number of unit we can produce 10,000, total cost will be 4,000. Low level of unit we can produce 2,000 and the cost will be 1,600. So difference between the cost 4,000 minus 1,600, the difference is 2,400. So then the difference between units 10,000 minus 2,000, the difference unit is 8,000. So 2,400 divided by 8,000. So zero point 0.3 is our variable cost. So we'll see, is it right? We can identify it. So 10,000 units times 3, it's give us 0.03, it's give us 3,000 cost. So total cost is 4,000. So 3,000 will be variable and 1,000 is fixed. So what we learn, fixed cost stay the fixed, doesn't matter the level of output up to the full capacity level. So we're looking 2,000. So zero point 0.3 for 2,000 units. So 600 will be your variable cost and the 1,000 again will be your fixed cost. You can see now on 4,000 our fixed cost was 1,000 and on 2,000 unit our fixed cost again came 2,000 and 600 was variable cost out of 1,600 total. So if you have any questions, so please ask me. I'll go back to you and we can do more activities. So cost behavior and the time, period cost, the cost related to the period, product cost that related to the finished good or the product. Okay, absorption cost, the cost which we can absorb into the objective of the absorption cost is to include the total cost. Absorption cost also known as a full cost, where including all direct and indirect costs, all overhead you observing. Because sometime if you say, oh, you bought it this 10 pound and you're selling in 12 pound, but at the end of the year you're paying the accountant fees, you're paying, some admin, you're paying some legal fees to get the license. So those costs you need to absorb into the product. Then you can see how much is overall costing you each unit to charge the right price from the customer. So end of the year we can say, or end of the month we can say how much profit actually we earn. Because if you're running your own business, you're saying, oh, every month, my taking is this, my sales is this, but you need to think about the bills you're getting after 3 months. So you need to observe every monthly basis. Those 3 months bills, on the basis of the usage can be each month. So you need to record the usage. You can absorb that bill into each. Then you can say what is your net taking really, and like if you're working your own business, your own salary you need to be take out. Then you can say how much actually profit you earn, because if you work for someone else you're supposed to earn the salary. So that's all we need to look around as well in the business. So overhead absorption method different. We can look around the production center, the center which produce this product, service center which provide the services, general overhead, it can be general admin, marketing. So we can observe the cost into the product on different direct apportionment or indirect apportionment method, which we'll go through some. Overhead absorption, how we can observe, we can draw the activities, budgeted overhead rate, we can find, we can observe. Then sometime our budget can be under or overestimate or overhead absorption rate based on the three things: machine hour, labor hours, and okay. So up to now we discuss about absorption costing. Absorption costing mean the full cost, where we absorb all the costs into the product, and we'll see how much is cost us each unit, and then we can decide the price, what price we're supposed to charge from customer. So that is a method of absorption costing. Okay. Anybody any question? So if you have any questions, so please drop me emails. I'll go through with you and I'll set some activities online for you to do as well. Okay, so activity-based costing. This is alternative method of absorption costing activity. Instead of you decide the cost on the base of the activity. Like if you're serving 1,000 customer and you're serving 1,500 customer, so your activities increase, your cost will be increased. If you have a like uh, it can be different examples, like activities, various activities. If you're serving more people, if you're traveling more, your cost will be more. If you're going most people houses, its cost will be more. So if you're serving less people, its cost will be less. So that's all about the costing. Yes. So please, anybody, any question? So you can ask me, so we can go through. Like here, example, total cost 10,000 cost driver inward activities delivery. So we can look around the 1,000 delivery. So 200 of these delivery related to X and 2,000 units of product X were produced. So cost per unit cost driver 10,000 divided by 1,000 delivery is £10 is a delivery. Cost activity attribute to X. So £10 times 200 deliveries, so that will be 2,000 cost, and the cost activity per unit, so 2,000 divided by 2,000 unit, because we are producing 2,000 units. So divided by 2,000 units, so that will be your £1 each. Anybody, any questions? So feel free, ask me. So that's activity based costing. Next method of costing we are looking is job cost. Is a cost unit that consists of single order or contract. So job costing question may be asked you to determine the job price by adding the center amount of the profit. Work is undertaken by the customer's special requirement. Each order is a short duration job, moves through the processes and operations as continuous. Identify a job, like you want to extend your house. If you extend one room, that's one job, and you have a contract with the builders, so that's the job, and we can calculate the cost, and we can keep how much profit we can earn on each job. So that's quite crucial. Next, we're looking the batch costing. Uh, Batch is how many units it consists of. Like you going shopping, if you buy four Lucozade, like an energy drink, and you can say this is your one batch. How much is unit contain it? Is a £2, four Lucozade, £2, and if you divide £2 divided by 4, so you can get the answer is cost you 50 pence. So in the same way, in the batch costing, we can calculate the cost. So service costing, two main types of services provided by the company operating industry, service provided by characteristic intangible. What is meant by intangible? You can't see it, you can't uh, they don't have a physical substance, don't have a physical, we can't see it, is called intangible. So simultaneously can't be inspected beforehand and return perishable. Can't be really, we save it service, it's a heterogeneity, it can't be expect exactly the same service every time, because different people, human being dealing with, but we service standard, you have to say welcome everyone, you have to wear the certain uniform, like a head on your head, to provide the good services to the customer, like the nurses wearing the uniform properly, like the teachers wearing, and various other service industries. So to calculate the service cost, so we can use this method, and that's service costing techniques, we can use how many people you will serve. So we can look around the total cost for the period divided by the number of service unit provided, like, total cost of NHS and how many patients you have served. So that's called the service cost. And this we can calculate. Service costing is quite crucial. We can calculate, service costing, and that will help, to calculate the proper cost. Anybody, any questions? So feel free, ask me if any question. Okay, so next is a process costing framework, which is a process costing one process to other process. So always you look around each process as a separate cost, then you moving to the second process and the third process. So each process you can find how much is the loss. Normal loss we say is a 5% waste can be. If it's more than 5%, you maybe treat as an abnormal loss. So step one, calculate the normal number of normal loss in units can be step. Calculate the expected output in the excess. So total cost, material, labor, overhead, and step four, calculate the cost per unit of expected output of each process, and that's called process costing. So which is quite used in the manufacturing industry. Loss is gain on the scrap. So normal loss, the loss which we were expecting. Abnormal loss, the loss which we were not expecting. uh, uh, Abnormal gain, you was not expecting to gain on it, but you have sold this. So these all the losses and the gains goes in the profit and loss account. So if you have a more loss, it means you have more expenses, your profit will drop. If you have an abnormal gain, you was expecting loss, but actually what's happened, high demand, the people, even the little faulty goods, people are happy to pay you more. So that is abnormal gain we gain. So I include a few example, like you see there, 10,000 1,000 units is cost us 4,500. There is a normal loss we expecting 100 unit. Abnormal loss, it was not 100 unit, it was more than 100 unit. We managed to finish goods 850. So 850, so 150 is towards need extra work on it. So 4,500, that's total cost. 1,000 units minus your 100 unit, which is a normal loss. So we can say now 900 divided by the cost is £5 each. So abnormal loss, we have 50 unit we process, and that we can only gain on it £250. So £250 go into profit and loss. So these are all example of process costing, so which will go through some numerical question in the next lesson. So next our discussion will be the variance. What is one by variance? Variance is the difference between budgeted and actual. So different causes when you buy material price variance, material usage variance. Material price variance, of course, we can't control it. The prices can go up due to the inflation. So these can be material use high quality. When high quality material you use, the wastage can be dropped. So material usage wastage can be low, but the price variance can be high. But always we need to look around the overall variance. Overall saving is better. If we're not saving, is lost. So labor we have, then we can labor rate variance, labor efficiency variance, overhead. So variances is, these are the different reasons of the variance. It can be price, it can be poor estimation. So sales, always if you budget 100,000 sale but you sold it 150,000 worth of sale, so you sold it 50,000 extra, that 50,000 is favorable variance. So reason for the adverse variance, why it's not in your favor, is the adverse. So different reason can inflation, the poor estimation, careless. So marginal cost. Next we looking area of discussion is the marginal cost, the cost which is changed with the level of output. All variable cost is contribution. Couple of you already maybe learn about the break even. Break even is a point where no profit, no loss, which we'll go through during our following lessons. So sales minus revenue, where sales revenue minus variable cost, we call it the contribution per unit. So every unit we produce, how much is contribution is he giving towards your final profit. So always is quite good to be look around the uh, contribution. So profit and loss, marginal cost, absorption costing, difference between them. So please go through these slides as well, a bit, background reading, the advantages, disadvantages when you do your assignment will help you as well. So marginal cost, we can look around. The marginal cost is a closing inventory valued at the marginal production cost, absorption cost, closing inventory valued at the full cost, where we include both fixed and variable costs together as well. Increase in period absorption cost report higher profit, and more fixed overhead include the closing inventory than the opening. So the cost of the goods sold for the period decrease and the profit can be increased. So all this is a discussion which we'll go through some numerical during our next lesson. So please, argument in the favor and against of the you use variable cost method, or you use the full cost method, which is called absorption costing. All the variable cost is called marginal costing. So both have own advantages and disadvantages. So closing inventory valuation can be different. So please go through this and go through some background reading. The recommended books already given. This lesson is a recording which I upload on Moodle as well, so you can find recording. Those want to listen, so you can as well. Anybody any question, just drop me email. So today we learn about the costing system, where we discuss marginal cost, absorption cost, activity based costing, job order costing, process costing. We discuss about the variance difference between budgeted and actual, and we discuss the difference between management accounting, cost accounting is internal, and financial accounting for external reporting. So costing is gave as a fixed variable, semi-variable cost. So we discuss about the costing techniques. We discuss about direct, indirect cost. Direct cost, which is traceable. Indirect cost, that's indirectly, which is known as the overhead cost as well. So all this we learn. If you have any questions, so please ask me, and hope so I'll speak you all by next week. And have a nice time, have a wonderful time and day. So please drop me email, carry on if you have any questions. Start your assignment, start working on it. If you not get me, ask me, and I'll get back to you as soon as possible. Have a nice time. Bye bye.